If you want to invest in real estate, these are the top 7 ways that you can invest in real estate starting today, even if you only have $100 to invest. Now, if you only have $100 to invest, not all of these will work for you, but you can definitely get started. The first way and the easiest way, especially if you have limited funds, is to invest in a REIT. A REIT stands for a real estate investment trust. And this is similar to a stock in the sense is that you can buy REITs that are traded on like the New York Stock Exchange, the NASDAQ, and other stock exchange platforms. And what this does is this is buying a share in a company that is then going to take that money to go buy real estate property. So this is like the easiest way that you can get involved investing in real estate today. The really cool thing about REITs, and if you're a big dividend investor, you will most likely already know this, but they will usually pay very fat dividends very consistently because they do invest in real estate. They won't have the same appreciation or growth that other stocks have, but again, you're not buying real estate for that. You're buying it for the dividends and the cash flow. Now, the second way to invest, and I'm going to go over this super artificially because this is an area where I do not have a lot of expertise, but it is to invest in funds. It's a step down from REITs, and they're not traded on public exchanges, but it's a step up from owning your own real estate. It's where you're going to invest money in a fund, and there's different types of funds. There's funds that will only accept accredited investors. So you have to have a letter saying that you're an accredited investor to go put your money in. Typically, this means you make $250K plus a year on your tax returns, and you get your CPA to approve that and, get you a letter of accreditation. So you can go to these funds and say, hey, I'm a responsible investor, take my money and invest it. The other one is for non-accredited investors. Now, there's not as many of those funds out there because there's a lot more paperwork that they have to file, and they have to be a lot more transparent and forthright. And it's honestly a lot more of a hassle to take money from non-accredited investors because typically it's a smaller investment size. And on top of that, you have to follow all of these regulations and rules. And that's because you're not an accredited investor, which means you have to have more transparency and be more upfront about exactly what you're doing. And there's just a lot more red tape around it. But you can take your money and put it in these funds. Now, the idea behind this is ideally, and again, I'm not an expert here, but ideally you get somewhere between a 10 and 20% return on your money. Sometimes there's dividends. Sometimes you tie up your money, and it just depends on the fund, what the deal is, what all of that is. But you tie up your money from anywhere from like 3 to 10 years in a fund with different deals. And theoretically, you can get a really big payout when that deal sells. Plus, theoretically, you get distributions from cash flows throughout those years as well. But that's kind of like the intermediary way to invest money. That's, not in a stock, but like you have a little bit more money to invest and you want a little bit better rate of return on your money without having to, go fix the toilet by yourself. Now, the next one is single family real estate. This has been made super popular by internet influencers such as Brandon Turner, Ryan Pineda, and many more. And BiggerPockets has been a huge influence on people investing in single family real estate. It's also become increasingly harder as real estate prices have gone up and private equity funds such as Blackstone have also moved into the market as well. The good thing about single family though is there's tons of different markets and you don't have to invest where you live. There's also a lot more infrastructure now than there was 20 years ago where you can have management companies take care of the properties for you. Typically, they operate on a 10% fee, but you do need more money to put into this. Not as much as some of the other options we're going to talk about, but typically you can buy investment properties with as little as 10% down. They usually want 20%, and most banks that are bigger will take 25% down. Now, the next step up from there is if you have a little bit more money to invest and you want better deals, and a lot of people will talk about this being the sweet spot of investing, is multifamily units. Now, you can start with multifamily, obviously, on like a 2-dwelling like duplex. That can be really good, and there's a huge community for house hacking on duplexes all the way up to 4plexes because you can get FHA loans on them. However, between 4, because you're going to get out of the HOA requirements. So if you go anywhere between 5 and let's say 20 units, because 20 units are usually too small for these funds that we talked about before, that's usually the sweet spot of where people like to get really good, what they call wedge deals, where you can buy essentially mispriced assets in the market. And this is usually where you're going to need somewhere, because it's considered multifamily, but oftentimes you're going to need a commercial loan for these, and commercial loans often require 35% down. So you're going to need more money for that. Plus, you can get a lower door price per average, but the total purchase price is going to go up. So if your door price is $100K per door, but you're buying a 15-door complex, you're going to need 1.5 mil or 500,000 down, roughly at 35% plus closing costs, etc., etc., etc. So there's huge opportunity there, but it does cost more money. It can also be a better way to acquire more doors if that is your objective. However, in my personal opinion, and I don't own a lot of real estate yet, we have one investment property so far, in our primary residence. We're probably going to acquire 1 or 2 more end of this year. But based off of my experience and all of my friends that own real estate that I've talked to, you typically want to focus on what your cash on cash return is, because that's what's going to allow you to invest more money into your next deal. You can focus on your total return on investment. However, at least in my personal opinion, in the beginning, that's not necessarily what you want to focus on cash makes a bigger difference unless, and here's the big asterisk mark here, disclaimer, unless you have a really high personal income, because then it makes it more advantageous for you to go for the long-term gains rather than the short-term gains, because you don't need the cash to acquire those next deals. Your personal income is going to provide that for you. Next is commercial real estate. And I said commercial loans earlier. Don't get those two confused. Commercial real estate I'm referring to is typically stuff that operates on a triple net lease. So it's not residential. It is where businesses rent. So like you buy a building and you rent it out to Starbucks and they put their, coffee place in, and you rent that on a 7-year lease with triple net. So they're in charge of property taxes, utilities, and maintenance. And these can be really beneficial and really awesome if you can get the right commercial property, because again, you're cutting out a lot of your expenses and you're getting a long-term tenant that needs the place to be respectable in order to continue doing business there. So oftentimes it can be a lot less headache than having tenants that will trash your entire property for whatever reason because they got hammered weekend. The next, and these two kind of go back into residential real estate, but these are different ways that I would invest or potentially consider investing depending on the market, location, property, etc. And again, if I didn't disclose this at the beginning, none of this is actually investment advice. These are just different ways you can invest in real estate. But I would look at short-term rentals. Again, going back to cash on cash return, assuming it's the right property in the right location, in the right market, they can provide an enormous amount of cash on cash return and allow you to go get more deals. And this is listing your property on sites such as VRBO or Airbnb. Now, there are downsides. There are people that don't like to use Airbnb as much anymore, but as far as renting a house that has access to a kitchen and a lot of other features that you can't necessarily get at hotels and or privacy, Airbnb still tends to be the best in the market. That and VRBO, there is no other really workaround for these short-term rentals. And the last one that I'm going to throw in here is a little bit different because it's a unique approach, and it's a little bit more difficult because there is no popular app that, at least that I know of. If you do know of, please leave it commented down below in the description. I would love to check it out and do a review on it for you guys. But the next one is midterm rentals. And this is our last one that we're going to talk about. But doing midterm and or corporate rentals can be huge. And I'm going to use the example here where you would rent to a nurse or to the hospital that is paying for a travel nurse to come in. And this is one example. There's all kinds of other types of corporate and or midterm rentals where you're really leasing anything for, 4 weeks all the way up to really 8 months is kind of that where the midterm rental goes away and becomes full on rentals. But it's a really phenomenal market where you have a higher turnover, but you have really good rates, and it's a happy medium between the extra work of running an Airbnb but also having a higher rate, higher cash on cash return than doing just a normal long-term rental on a residential property. And you can do this with any unit that you have. You just have to have the relationships in place and the know-how on how to actually fill it. And again, it's gonna really come down to location on this property and the relationships and knowledge that you have. But hopefully this video was helpful. If you got any further insight or knowledge from this, please hit the subscribe button down below, because my objective is to help people just like you, hopefully who are entrepreneurs looking to take their cash and turn it into quality investments. And if you want me to go more in depth on any one of these areas, please leave a comment down below and tell me what you want to learn about. And I am more than happy to do the research and provide a video to you as well. So again, if you haven't already, please subscribe to the channel and have a wonderful day.